Welcome to TradeTheMBI.com. This is John. This report is for the 22nd. Well, it's not quite spring fever, but there was still the little push towards the high the other day, and it faded back a little bit. At least for the S&P, there's still the drag of the Nasdaq on the S&P a little bit, keeping it from really breaking out into ridiculous stage. But from a reading standpoint, magenta is still over yellow. We're rising now, approaching the 40 level, which that would be getting into a pretty decent extreme. We could see a significant rise in MBI white. We haven't seen that kind of move since, well, we had that dip right over here. So not there yet until the crossover, but definitely worth watching because it begins to show some weakness. Shakeout made new highs, so it's congruent. That just means that it literally is going to come down to a question: are there enough new buyers to keep elevating things? And this is what happens. You start to get that fatigue. It starts to wear out. And of course, then there'll be people screaming double top situation, those kinds of things. But from a NASDAQ standpoint, you can see it's much more serious here with that MBI white literally matching the rise of MBI magenta. But as long as magenta leads, you've got new shorts to squeeze. So that potential still lies there. Shakeout still super positive. So from that standpoint, uh, you're still going to get some range moves back and forth. And when we looked at it intraday, there were some positive extremes, and they just get filled. And it's pretty straightforward. Treasuries, any dip from here, though, I think starts to become attractive for, uh, you know, people who want safety. Because at this particular point, you're not getting any safety when you know inflation is going to outstrip anything that you put into a treasury at this particular stage. Oil, modestly off, mostly just correcting. It's got a couple of positive extremes, almost filling it right there, just a little bit further. Right, if it breaks below that 80, it'll fill that, and then it's free to continue. Um, it's interesting when not yet seeing a drop in the amount of consumption. It's going to be an interesting one from a supply issue, though. What happens with the fact that there's literally no traffic other than Russian Chinese boats through the Red Sea? Uh, we'll see how that starts to play out. It should start to have some type of impact here coming up shortly. Euro dumped, of course, recognition that they're getting more deeply involved in the Ukraine situation. France sending troops, Romania, and some of these others. So that escalation and the fact that the Russians are moving faster by the day means that that could be resolved in 5, 6 more months just before the U.S. election. And of course, the U.S. election is definitely going to create all sorts of interesting things for the market. Gold, pressing its gains just a little bit, not too normal here. It popped up, but the reality is that the Fed is going to ease and it's going to have to continue to rise. That they didn't change rates yet doesn't mean that they aren't planning to. It just means they haven't gotten to it completely. And it's just a matter of that build and just waiting for it. Same with the cryptocurrencies. Of course, they have a bit more positive extremes to fill back in if we get some weakness. And we had that meeting here between the MBI white and magenta broke above. That should push it back up towards its peak. And likewise for ETH, which was a little bit behind, had that little rumor situation where they said the SEC was going to label them a security, blah blah. And this is the manipulation you get with those, and they're easily moved in those kinds of situations. It doesn't quite have the same impact when you're looking at the big markets, particularly the ES here. So from a 50K standpoint, took the win after that. We had a DLC spread finally signed from underneath, but whenever you have that steel below negative 13.5, once it pops back above, you get the resurgence. So, yeah, the DOC spread, as long as it stayed below negative 13.5, you were going to see a continuation. But once it popped back above, that was enough to short-term buyers to keep things in place, and didn't even make it back to the 76% yet. Not not too weak as far as pullback, but enough to just ease some of that tension going up. It was all rosy pre-market, and then as soon as the market kind of opened up, we had another push back towards the highs, and then the sell programs. And that's typical of a day after FOMC. I wouldn't read anything into that. Usually, you trade opposite the FOMC day. It's kind of a normal feature, so it wasn't anything significant. And you can see we're just playing back and forth, testing how much supply is available for sellers, and it's not that much, and it's keeping things afloat. So we just continue to follow what we see, and as always, trade well. And if anything's relevant, I will get it on the Skype chat. But just keep looking for the good ranges and play them intraday. As always, have a good one.